Good morning, afternoon, evening, I guess, depending on when you're watching this. Most importantly, happy Father's Day to the other fathers out there, and best wishes to Pat Woodward, who most in the HGSI family know had a fall this week, coincidentally on their 60th anniversary. So happy anniversary wishes as well, but more importantly, I hope Pat gets better quickly and keeps Ian on his toes. So, didn't do this last week as I was in Italy. Had a great trip with my wife to the Amalfi Coast, and looking forward to next weekend when I'm going to have my meeting. Because of the meeting, I probably will not be doing this next week either. So let's see what we can do for this week. I put range bound still in capital letters because we are. We did have a relatively ferocious move up this week, at least until Friday when we pulled back. And we continue with the question of, do we break through? Or do we just pull back into a trading range? If one goes with what's been happening, I think we go back into a trading range. And then perhaps, I think I saw something on my phone when I woke up this morning, but I forgot to look at it. If something great happens with Draghi, then perhaps, and there's a resolution to the stability side of Greece, news might be something that could get us out of this trading range. But I guess I would point out, for fair balance, news could take us up and news could take us down. Disclaimer, as always, is for educational purposes only. I'm a doctor, not a broker. I am 100% independent. Any software tool that I use, I have paid for at least some point in the past. I am not paid by anybody to talk about their products, to say good things or bad things, and trading involves risks, and you alone are solely responsible for any decisions that you make. I do call out people that I find valuable in my training, and my basis is I'm a can slimmer at heart, and I learned from Bill O'Neill back in the, I guess, mid 90s when I started to trade. And then the basics of can slim, I think, can be improved upon through the likes of people like Morales and Catcher, who brought Bible gap ups, pocket pivots, punch bowl of death, a new book which I'm just about finished with about short selling. Timely thing for that, I suspect. And then how Woodward and Brown Investing, Ian and Ron up above the books, who have taken a lot of the CanSlim ideals, tested them, adjusted them, built upon them, and in partnership with HGSI, created a software tool that allows, not automation, but technology can assist you in finding and managing your trades. I think that Alexander Elder, and here he is with his partner, Kerry Lavorne, offers a great education about some of the psychiatry or psychiatric and psychological issues around trading. But more importantly, he brought us things such as the impulse indicator, which we use, and the force index. And these are three great books. The Trading for a Living has been updated, and I probably would read that one first and then read the third one. Come Into My Trading Room, which I believe was his first book. Much of it's repeated in the first third or so of Trading for a Living. Now, it's one thing to find great stocks with CanSlim and other methodology. It's another thing of knowing when to actually sell them, how to trade them, to do stocks or options, to do money management. And wouldn't it be nice if you could take a list of stocks that you found to be attractive and filter them and look for signals that might fit your trading needs? And that's the type of thing I've learned from John Person, who has a number of packages available. Again, not paid to talk positive or negative about anybody, but I tell you what I use and I show you how I use it. And I found John's stuff to be incredibly helpful. I'll show you some of the software side, some of which you probably already have in Thinkorswim. And then he's got a number of books. These are two of them that I highly recommend. And then just supplemental things from a volume price analysis. There's Ann Coulter. From a position size and money management, Van Tharp. From comparative relative strength, Thomas Dorsey. And then my partner in crime and my co-teacher, co-presenter for the upcoming meeting and meetings in the past, George Lee, my favorite Canadian, wearing his typical Canada hat. We look forward to seeing George this coming week, as well as those of you attending our meeting. I own a lot of programs. I think today I killed my desktop, so all you see is pictures from my Italy trip if you ever see the desktop. But I'll probably use every program that's up here, at least through EdgeRater, and show you how I use them to find stocks and manage my trades. And I'll talk a little bit about my performance the past couple of weeks, as well as the market. Market thoughts, first two lines haven't changed. Topping is a process, and the markets are likely to peak sometime, but usually preceded in months, frankly, by major divergences, some of which continue to be lurking, perhaps becoming more prevalent. And I continue to be on top watch, although, as I've learned from others, you can see still a fairly substantial move in the last couple of innings of a bull market, even when everybody's looking for a top. Major themes, still it's all about the grease, especially now that Janet and the Fed are on hold till at least September. I thought she did a fairly masterful job, and you saw that in the market in late Wednesday and all Thursday, of convincing us that the economy was picking up. The Greek risk is in our trading partners, not as much risk for us, and that they were able to continue to delay holding from raising interest rates. Now, the interesting thing is, she didn't really respond to the questions about did she do it because of the ECB or the International Bank, all of which have come out strongly to suggest that it's not the time for the U.S. to raise rates. Small stocks have been in the lead. We saw that with growth stocks outperforming. And the bad news is we've had a big move to the top of the channel, right to resistance. And does that mean the most likely place to go is down? And I think that's probably the case this week. Or will news or something else break us out to new highs? Not going to be the Fed saying they're not going to raise rates. They've already done that. Not going to be a major earnings surprise. There's not a whole lot of earnings news out there. It could be a major M&A activity. We've seen that at times propel parts of the market. But I think what people are going to be looking for is something from the Greek exit or saving the Greeks. Chart review, yield still is critical. As rates drop, it's good for REITs, utilities, and dividend payers. MLPs would be in that list. And as rates go up, as rates drop, it's bad for banks who have a double whammy with some Greece concerns, especially the larger money center banks. Looks like we may be in the midst of another leg down for oil. And financials are under pressure, again, probably tied to the fact that rates are not going up and concern that some of the large banks might have some pressure related to Greece. Not to say that there isn't leadership out there. There's a lot of small stocks, biotechs, specialty pharmacy, and a couple of newcomers this week that really have big moves on Friday, airlines and home builders. You kind of wonder on the airlines, does some people get access to Barron's cover before it comes out, because Barron's cover talked specifically about airlines with a 50% return over the next year. Well, you'll see how high they came in our calculations within HGSI. So this is, I call this my sector rotation picture. And I'm going to blow it up a little bit and see if I can't. I don't even know if, you know what, I don't think I can. I don't know if I can make it so you can see it easier. I don't think I can. So let me I'll leave it at this. It's probably as big as it's going to get. What I do is I put major let me back up. I purchased a package from John Person. One of the things that John Person does in his package and TradeStation is he breaks out the major ETFs and the major stocks in the ETF. And then I continue to add and subtract stocks from this list based upon my personal desire. Why do I do this? Because I could stand back and I could see a sea of red under energy. Energy wasn't working, whether it's energy, XLE components, XOP, or OIH, probably 25, 30 different, actually 35 different instruments, 30 instruments, and only two, Sanchez and Valero, had any positive return on Friday. That tells you how bad energy is. Materials in general, the XLB from number 49 to 68, so that's about 19 different instruments, only 3 were positive. International Paper, EWN, it looks like, and SIAL. Okay, well, so I don't want to be necessarily materials or energy, and I see this during the day. Look at banks. XLF, XRE, Ozark, one of my holdings, was up a little bit. That's pure luck that the one you own is, 2 and 20 that are up. Insurers were down. Again, rates going up, bad for banks, also bad. I would think that rates going up are good for banks and insurers. Rates going down, are bad for banks and insurers. Broker-dealers, all of them down. Credit cards, down. Industrials, a little mixed, but mostly to the downside. Technology, down. A couple of semiconductors, notably Micron, was up a little bit. Now we get some green in consumer staples and retail. It's kind of interesting. Perhaps summer vacation, people are out shopping. Consumer discretionary showed up pretty good on the group rotation side, but only had a couple of positive stocks. Utilities should do better in a falling rate environment. And last week they're all red. This week on Friday we saw some green coming in. Healthcare, this is the strength of the market right now. And then selectively in transports, and these are mostly airlines: UAL, DAL, AAL. VLO is not supposed to be in here. That's a mistake. Save was actually down a few pennies. Love, JetBlue, and then in trucker, and then Hawaii, and then JB Hunt were up. So transportations so far as good as we get. All the home builders, at least in the ITB, were up. Social media showing some Twitters or glimpses of green. Zillow, I think they had some transaction that they sold off an asset. Baidu up despite Chinese stocks getting clobbered on Thursday night. And there's Twitter was up $1.27 as Twitter got a low in. Then we go back here again. Here's a broader list of the home builders out there in the XHB. XHB includes things such as Best Buy, Bed Bath & Beyond, and Home Depot, which were down. But the home builders themselves and some of the components like Mohawk and the carpeting were up. So I'm watching this type of a chart on a daily basis and intraday just to get an idea of where the money is going during the day, and I find that to be extremely useful. Now, if George is watching or Ron and they have an answer for me, what is the symbol in HGSI for the CBOE 10-year Treasury Yield Index? So I use this out of Warden, and it goes back to 2006. And in 2006, and you basically divide the number on the right to get the current interest rate, interest rates topped at about 5.2%, or the federal funds rate. And this, again, is in 2007. And I could have expanded it to the left and saw what was going on before that. But the point I wanted to make is that even with all this Fred speak, you can do a trend line at the tops here. And we have not broken above the trend line on this downtrend in yield. Now, we did bottom, and I wonder, this was when the market was really tanking in 2012. I don't know if that was the, what do they call that, the exit tantrum, where interest rates got down to 1.4%. These are not the federal set rates, rather, these are those set by the market, the 10-year Treasury yield, obviously heavily influenced by Fed rates. The Fed rates went to 20%, these would be a lot higher. Fed rates go to 2%, they're going to be higher. And often the external market, the public markets, not the Fed, do have an influence on day-to-day rates as well. So you can see from the lows in 2012, we ran all the way up to close to 3% at the beginning of 2014. We peaked here at 2.5%, and we pulled back down to 2.267. Why is this important? Again, when this yield is falling, it is good for people who are borrowing money, and it's good for our companies that borrow money, like utilities. It's also good for those entities that pay a dividend because it makes them more attractive. So the yields are down this week a little bit. So again, we'd expect banks and insurers to be bad, and we'd expect REITs, MLPs, dividend-paying stocks, and utilities to show some strength. Now, it's not down a lot, and it certainly is up a lot off of the bottom. Now, you could argue that we're in a new trend up with higher lows, and I guess starting to see some higher highs, but we haven't seen a higher high over here on the right. So I would like to see us take out this trend line and have a new higher high before I'm going to believe that we've changed this. But bottom line is yields are down this week. That's going to affect some of, at least on Friday, affected certain trades. I always put this up here, and we are stuck in the top 5% of this curve where we are going up and down, up and down, up and down. Whenever it looks like it's time to sell, we're hitting support. And whenever it looks like it's time to buy, it looks like we're hitting resistance. Very difficult market to trade. Frankly, some of my best positions are either very short-term things that I take in the morning and get out the next day, or some of my stronger stocks in good industries that I just pinch my nose and hold through small pullbacks. I was fortunate enough to have, using a Gil Morales term, a campaign to the bullish side against Ambarilla that has accounted for a big portion of my profits this year. And during the meeting, I'm going to go through step by step how I picked Ambarilla and some of the, let's put it this way, how I made 6 figures with no investment out of pocket, which had to do with some option strategies where I actually got paid to buy the stock. And I'll show you that during the weekend and maybe recap that in the next couple of weeks on this video. And again, I have to change my tone based upon where I think I am in the market. And let me just pull this thing down a little bit. Since I believe that we have been living at the top, I have raised cash. I have taken smaller positions. And on those positions I've done some option strategies around them, which protect my downside, might limit some of my upside, but give me premium in my pocket while I'm waiting for the market to declare itself. As I put, and this is my quote, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earning date is scheduled. I know some people have had trouble with the free, not written by me, TradeStation EPS indicator. If you have that and it's not working, get out of TradeStation, go into your C programs, 86 TradeStation program directory, find the CSV file that says something about earnings and delete it and restart TradeStation. You probably will be okay. Big news this week, we got some home sales and durable orders. Mortgage index, we've got a third estimate of the GDP. Consensus is that's going to be down about 0.2 regardless. That means the Q1 gross domestic product contracted, although maybe not as bad as they had thought in the past. We'll get some inventories, we'll get some initial claims and continuing claims, spending, natural gas inventories, and Michigan sentiment. Some of this will be market moving. I think the most market moving is going to be what happened, in Greece. A light week for earnings unless they're one of your stocks. It might be a light week, but we've got BlackBerry. We have Lennar, I think, as a big home builder, APOG that has some, I don't know, wood or non-wood components. Bed Bath & Beyond. Micron, Nike, AZZ, Finish Line, I believe, FINL. So a lot of companies that are commonly held will have earnings this week. As always, after my introductory comments, we'll go through the market using my various tools from a top-down perspective, bottoms-up, try and give you some potential ideas for this week. Just last comments about my meeting. Remember, my email is hgsidoc@gmail.com. If you have interest in attending, the meeting is officially sold out. The reality is, if I admit the first 3 hours, I could take 25 more people, but the first 3 hours I'm in a smaller room, and anybody that will come that signs up now would have to agree to take, quote, restricted view seats, which just means you have to sit in the back of the room without a table on Saturday morning, but I'll actually give a discount for that. So if anybody wants to come, I got to give the final list to the hotel on Wednesday and to the caterers for the barbecues by Thursday, but I will have the ability to take one or two more people as we go into the end of the week, or the middle of the week. And then I'll see whoever wants to come in Florida. Right now we've got 26 attendees. The room is comfortable at 25, but I could sneak 2 or 3 in the back. My lovely wife, actually we were in the Amalfi Coast, which is one of the most beautiful places I've ever been to, except for one thing. You notice there is no beach. If I magnified the view, you would see there's little beaches at the base. Now, what you can't see well here, and maybe in other pictures you can, is the hotels and the places you stay are up at the top of the mountains and some down in the valley. You have to take 400 steps to go from the hotel to the sort of kind of a beach. Going down in the morning when you've had no alcohol, have had a good night's sleep, and a hearty breakfast is pretty easy. After being out in the sun for 8 hours, drinking, swimming, boating, and having a great time, you look up at the mountain and it's not much fun going back up. I realized that I am no longer 20, and boy, I am a lot more out of shape, as my wife keeps telling me than I thought I was. All right, so let's just do a quick market review by going into my spreadsheet. So this is a spreadsheet that I do every week, and the reason why I do this, oh, that's not the one I was looking for, is it gives me some data to tell me what the market did last week. Now, one of the tools within HGSI, and I'm going to talk about this for a second, is people that have been here before know that I'm sort of anal, and I do a lot of different lists. Some of these are pre-planned scans called smart groups in HGSI. Some of these lists are various scans that I do in HGSI. I've been doing them for a long time. Many of them are direct downloads from Investors Business Daily, like IBD 50s, Cancel 'em Select, New America. Some of them are from MarketSmith, Power from Pivots, Recent Breakouts, Top-Rated IPOs, Top-Rated Stocks, for example, the MarketSmith Growth 250. And then some of them are my own scans that I've made in HGSI, looking for stocks, PSA reversals, close-it squeezes, pullbacks to the 50, et cetera, et cetera. And what I do is I use these to build a giant watch list, and I can't spell, as you could see, that I scan over the weekend and during the week looking for buying opportunities. But it also gives me the opportunity on the weekend to take a look back and see what was working and what wasn't working. So let's spend a few minutes. So I said, imagine if I bought all these lists with no discrimination at end of day on Friday the 12th, same way as creating the list at end of day. And I closed the list at the end of the day on the 19th. The only filter I use is I didn't look at group indexes, and I looked at buying $1,000 of each instrument. That means a big stock will have less shares than a small stock. And then I look and I see, well, how did various market components fare? So the first thing I want to find is, where's that S&P 500? So the S&P 500 is perhaps indicative of what the market itself did. So it was a good week in many ways, and the S&P 500 was up 0.76%. As I look down my list, I see that there are about 13 of the entries were negative, and from 18 to 91 is about 73. So 73 were up. So that means the majority of my groups were up for the week. Okay. Then I look at traditional growth stock indexes. For me, the HGS 100 was up 1.45. The IBD 50 was up 1.99. One of my favorite from David Ghilardi, who contributed probably a decade ago, smart groups in HGSI is the sprinters. They were up 2.28%. So when these types of indicators are up, or groups are up so much more, 2 and 3 times what the S&P 500 is, I know it was a good week for growth stocks. Now, my holdings are sort of suspect. They're suspect because I'm actively managing them. They're hedged, and it doesn't take into account position sizing. But I like to see that my holdings are at least north of the performance of the S&P. Now, had I not managed my portfolio, I still would have been very happy this week because I was out of town, and had I not done anything, it would have been up over 1%. And when I look at the distribution of wins to losses, 60% up on the week is not a bad thing. Now, as far as what I teach, there are things in here that would not be considered classic growth stocks. There are a lot of option plays and different things. So I might look at the stocks that I talked about on my talks, the buy watch. And I could see that my buy watch from last week was actually about the same as the HGS 100, and the Market Smith 250 was up 1.68% or 76% up. That's not a bad number. I'll take that every week. And if I go up, I see that my filtered buys, so these were 11 stocks, and Sunday night, I will identify who my filtered buys are by running my larger buy list. In this case, it was 46 stocks. Through some person signals, I came up with 11. And these are the stocks that I actually was in for the week. And you could see 9 out of 11 were positive, 80% positive, and a return of 2.57 is actually about 3 times or more than 3 times the return of the S&P. So it was a very good week for the stocks that I traded. I'll show you how I find those. The GAF All-Stars, I'll also show you. It's sort of CanSlim on steroids. It's HGSI on steroid. And it's a tool that just finds the stocks that find its way into the highest number of growth stock indexes that are pre-selected. And you could see they had 83% were up, 25 to 5, and up 2.5% as well. And then the other things I look at are some of my subgroups. Accelerated mutual fund ownership, 18 to 2 winners was up 4.8%. This is a screen of the day in Investors Business Daily. And then one of my favorite setups, pullback waiting for a signal. Now, what would that look like? That would look like a stock that's been in an uptrend, that's pulled back to support and basing. And it's waiting for momentum to come in. And I will look at those and watch them daily, looking for things like person signals to come in, kahunas, pocket pivots, Bible gap ups, PSAR reversals. And these stocks often perform well for me when they get triggered, and you can see they were up 4.72. Let's go down and take a look at a couple of what they were. So these were the stocks that were in this group where everything was a winner. And Vasco, Builders First Source, airline stock, a fairly broad-based representation of stocks. But if you're a HGSI or if you're a growth stock trader, you know about VDSI, you know about Arista Networks, you know about Paycom, you know about Cambrex, Acorn. Interestingly, Energy 3X Bears were up this week. Really came up at the end of the week, which is why I think that they might be sort of telling us that this market, at least from the oil, the XLY, is going down. Another thing I could do with the same tool, I could look at different markets, and I could see gold led for the week up 1.67, small stocks leading, and commodities, interesting, both commodities and dollar to the downside. But even the downside numbers are nominal, so this was a positive week for traders. If I look at sectors, biotech, healthcare, consumer, home builders, the same things I showed you on Friday is moving. We're leading the week. And XBI had just a monster week, up 5%. So that tells me not to be too bearish, although, as I'll show you, we are up at the top of the trend channel. Things still positive in the market despite Friday. It also tells me that growth is in Fago and that growth is working and that I should continue with my growth. Now, in EdgeRater, I can mimic some of the HGSI rotation. To me, I still like HGSI's flexibility. However, EdgeRater allows me to do some neat things. And you could see in the top ranked industries, specialty pharmacy, infrastructure software, I believe, is the CyberArks, VDSI, etc. Managed care, semiconductors. And this is looking at a 22-day percent change and taking the last 5 days average rank. And the weak things continue to be energy, coal, steel, integrated oils. The next two look at biggest move to the upside or downside. Upside, environmental engineering consulting was up 12 spots, but these are all still relatively low except for toys and games. But the things that are moving up, these are the things that are starting to pick up speed in the movement, although they may not have moved as much or they might not be as high. It shows you how they're accelerating their movement. And these are the same to the downside. I can run this report in stocks as well and see Heron Therapeutics, a company I know extremely well, that has a investigational nausea medicine for cancer care. Stock has almost tripled in the last couple of weeks after data was presented late May, early June. Sarepta, Antera, Oncothreon, they all are healthcare related stocks, as I think are some of the others. And what's not working, Caesars, Emerald Oil, China Information. So I like to find stocks and I like to put these into watch lists, frankly. Hindenburgs are evidence of market turbulence. To get at Hindi, you need 4 things to happen. New highs have to be better than new lows. Rising moving average, McClellan less than 0, and new highs can't be more than twice the new lows. You use the NYSE and the S&P 500, or spiders rather. All 4 of these components have to be positive. Why do I care about a Hindenburg? There's not been a major crash in the market in the last 50 years without a previously firing series of Hindenburg omens. However, most of them are very short pullbacks or nothing, and only 1 out of 4 are meaningful. I look to see a series. You could see we had a couple in March and a couple of June. The ones in March no longer count. This tells me that there is increasing risk in the marketplace, but they quickly came off, and you could see on Friday, despite a down day, we met none of the parameters. When I see them, especially when I see a series of them, I get nervous. Buckets. Take the S&P 1500, take the Bollinger Band, take 1 bucket above and 1 below, you got 12 buckets, and tell me in the S&P 1500 how many stocks are above or below the midline and what bucket are they in. So on Friday, 2/3 or so of the stocks were above the midline. That is not an extended amount. And that's consistent with the majority of stocks trending up. In an uptrend, you'd be bouncing between your upper Bollinger Band and your midline. As long as it's above 50, that would be considered somewhat bullish. Above 60 is good. When it gets above 75 or 80, we're getting to the point where we're way overbought. Then I look to see which buckets. I can see that I have almost 10% of stocks trading above their upper Bollinger Band. That is hot, but not hot enough for me to worry about. When that number gets to be 20 or 30, either above or down here below the Bollinger Bands, I expect a fairly imminent market reversal. We might be a couple days away from that. So this would suggest that we have room to still go up in the market. In Edge Rater, we have the Woody indicator. So the Woody indicator, here's a list of major indexes. And it's percent B1 change, looking to see how much of the distance between the Bollinger Bands were covered by this daily stock movement between open and close. Above 24% is a small kahuna, which would be a light color, red to the downside, blue to the upside. Above 40 would be a big movement, would be a deeper color. And if I go down to where we are, we could see that on Thursday we had a great day and actually had a big kahuna fire on, it's probably the Russell, let's see, is that that is the NASDAQ had a big kahuna fire on Thursday. And we've been in this, well, we've finished talking in a second. So we had across the board kahunas on Thursday to the upside, which is bullish. The second group is percent B, and it's just like this calculation here, except it's looking at just the index. And so if the index is at 0.5, it's in the middle of the Bollinger Bands. If it's at 0.9, it's above the top of the Bollinger Bands. If it's 0.1, the index is at the bottom of the Bollinger Bands. And by convention, above 0.71 is green, below 0.29, I believe, or 0.3 is red, and the rest is yellow. That just gives you a location of the index within the Bollinger Bands. The Woody indicator is you take the percent B times the percent B change, or times the bandwidth, which is listed here, and you get the Woody indicator. Green is the wind is at your back attack, it's okay to be long. Red is a time to be short, and when it's all over the place, it's called chop, and it's tough to make money. And you could see that we can go all the way back to the end of this really nice long green period in early March, that we've had 3 months of chop. So if you've been whipped to shreds in this market, this is the proof of what's going on. It's just not you. Now, this was markedly worse looking back 10 days ago, 3 to 10 days ago. A glimmer of hope here that we've had some green pop up in Q, which is the Russell, small stocks, I believe. That's the Russell. And it'd be nice to see another round of kahunas to the upside, sort of supporting that this market is reversing up. The rest of the scans are automation within EdgeRater that brings some of the better looking stocks. If you like buying squeezes that may have breakouts occurring, I brought up to the top all these stocks have a squeeze and the various types of breakouts, and we'll talk about some. Here's Lennar, big leader, and Toll Brothers. PTX is an interesting chart pattern. I know Continental is one I liked a lot. Acadia is one I liked a lot. So I can find stocks that I want to go spend some time looking at by running. This is the daily setup, George Lee squeezes. This is the weekly. That might be even better, finding stocks that have set up on a weekly. So for example, I know that Baidu on Friday was in a squeeze. It's been in a squeeze for 10 days, so that's a pretty long squeeze. And on Friday had a Mobo breakout in the squeeze, and it was end of the day just 3% below the 50-day moving average. So that tells me that that might be something that I want to look at. And it also closed 1% below the PSER reversal dot. So that's probably one of my stocks that are in a squeeze. So hopefully they're not extended. They're pulling back to support right underneath the PSAR dot, one that is a potential trade or breakout in the coming few days. Here's Facebook and a number of other stocks we might want to look at. I can look at Code Blue. These would be bullish stocks using some Morales and Catcher signals. And here's KB Homes, Lennar. Here's SkyWest Airlines. And I would say this is a great Israeli solar company. And I might be inclined to find the stocks that have the kahunas and throw these in a watch list. KBR is one that I also thought to be intriguing. How about Code Red? If I think the market's going down, I want to find potential shorts. And then what about seasonality? I could run all stocks or my trading stocks, and I could see that there are a number of stocks that have 11 out of 12 years positivity. That means over the last 12 years, at least 11 years they were positive, and I'm looking at the seasonality now template or 1 month performance. Okay, so I might want to look at some of these if I believe in seasonality. All right, and then I might want to look at stocks that have big movements and strong seasonality, and I might look at this column here, which is how I set it up for, and I could see that Medivation up 8 out of 11 years, not great, but average of 10%. Have no idea what Syntel is, SYNT, up 11 out of 12 years for an average return of 9%. Nutrisystems up 10 out of 12 years, average return the next 30 days, 8%. Is that important stuff to know? I think so. And I might, here's HMS Holdings up 11 out of 12 years, up 7%. So I run my entire trading universe, again, looking for stocks that I want to throw into watch list. Skip the JP stocks because that's developmental. And let's shut this one down. So now I've got a sense of the market's been in an uptrend the last little bit, as shown by my buckets. My markets are telling me that maybe I'm coming out of this funk. I don't necessarily believe it. I need confirmation. I don't see any evidence that we're overly extended or overbought. And now the next thing I'll typically do is I want to go into TradeStation and look at my elder indicators. Now, I use elder, frankly, I use everything for my own purposes. And I do things that are maybe different than the products were designed for. But hey, I'm not elder. I can, I find things that work for me. And then I have a tendency of adapting them perhaps in ways they weren't intended, i.e. how Ron adapted Force Index as a way for ranking stocks or industry groups for current momentum. So here's my index list, and it's a combination of ETFs, cash markets, and futures. And this is what I monitor to get an idea of what the market is doing. I do this intraday, I do it end of day, and I'm looking at a couple of things. I'm looking at, number one, the stock price. Is it uptrend, downtrend, higher highs, higher lows, lower highs, lower lows, and where does it fall in relationship to its automatically calculated elder auto envelope? Second thing I look at is the color of the bar, and these are the elder impulse indicators. And a green bar says it's okay to be long or hold, but not to go short. A red bar says it's okay to be short or hold, but don't go long in that index or in that instrument. And a blue bar says there's no signal, do what you want. I look at little red dots that might be occurring at the top of the price bar. I don't see any here, or underneath imminently at the price bar. And those are MACD divergence automated scanner from Elder, which may not be accurate 100% of the time, but it does drive my attention to look at the MACD for evidence of divergence. I look at the color of the larger dot. Is it cyan, I think, or is it magenta? Magenta is a sell, person sell, and cyan is a person buy. Every one of these indicators are packages that you have to buy. They don't come built into TradeStation. I look at my high jump indicator and see what percent of the highest high have I been in the last 200 bars. And this, when it's above 90, I know we're in a position we're likely to pull back. And I can look in multiple time frames. So I'll show you how quick this is. Start with the NASDAQ. It's the upper end of the channel, but they have a tendency to ride up the channel, so I don't care. It's green. That tells me the NASDAQ I could still be buying. It's in a person buy signal. I like to see that. It's only at 74%, and there's no MACD divergence. So I can still buy the NASDAQ and NASDAQ stocks. On the daily, on the weekly are green. The monthly is blue. The NASDAQ looks pretty good. The Dow Jones Industrials, not quite up to the top of its envelope. It's green. It's in a person's buy. It's at 56%. On the high jump, it's green on weekly, blue on monthly. I can still be buying Dow Jones Industrials. OEX, S&P 100, same story. Not near the top, green on a buy signal at 62%. Semiconductors had been hot, but as you could see, they sold off, and now they're heading back up, sort of midway in the auto envelope on a green, on a blue. So on a buy, on a hold on the weekly, and a hold on the monthly, so not quite as strong. S&P cash market should be green and green on a buy. Same thing on the S&P futures. NASDAQ 100, you could see green on a buy. And then the Russell futures, this is, you can see on a green, on a buy, and it's been in a buy for quite some time. And these are the strongest, and you can see how they're actually above their upper envelopes. Let me just check something here. All right, I do have my, all right, and we're not seeing a lot of divergences. Often we'll see, and we had some, let me see, make sure that I don't have an issue with my charting platform. And for whatever reason, my divergence dots I don't think are firing. I'll have to go look in one of my other platforms and see. Yeah, my divergence scanner is not working. I probably got something wrong in the settings. Bottom line is, across the board, my elder indicators are green in every major index. That means we're in uptrends. It's okay to be buying. My person indicators are green, which says also consistent with okay to be buying. The challenge I have is that we're getting up near the top of trend line channels and near resistance, which I'm going to show you in HGSI. All right, let's go into HGSI. And the first thing I'm going to do is push this back over. And I'm going to open up my, close this and open up my warehouse. And let me turn off my email. No reason for the email to be on. And these things should stop. Let's go into Markets Plus. And let's go to T1. So people have been with me before know I'm ranking these indexes by price and volume only, heavily weighted Friday, a little bit the last week, and very little the last 3 weeks. It shows me what, and I'm ranking them by raw combo. And what comes to the top are small stocks. I said small stocks have been stronger. And specifically, one could see the small cap S&Ps and the Russells and the NASDAQ. What's not been working, NYSE, the Dow, transports and utilities to the downside. You look at the dollar in the middle, although it was weak at the end of the week after Janet spoke, causing gold to go up. And let's take a look at some of these specifically. So we know that there were kahunas across the board in the major indexes. So I'm going to leave it just to show you what I'm talking about. This blue bar that fired on Thursday was a kahuna. And I need to know that because it tells me it's a very bullish momentum indicator. But I want to have a clean chart to look at. So I know that that was there. Let's just look at simple moving averages. And as always, I'm a proponent. Actually, I think it's a good time to talk about this. George and I, who'll be teaching this weekend, we probably are a little bit different. I think George, first thing is neither of us are day traders. George is a shorter term trader. He's a short term to swing, in my opinion, from watching him. And I'm more of a swing to position. So I like to go back and say, let's look at the S&P since the market bottom, and have I been better to be holding and pinching my nose or to be trading this market? And I haven't been holding and pinching my nose. I've been trading. But if you look at somewhere around the lows here and connect this up here with the highs of this past week, and then do this, you can actually see the bottom. You could see we're up 217% in about 7 years of trading days. Divide that by 7. So we have a 30% year return since the bottom in 2009. Some people would say the real bottom occurred in 2012 after let's see if I can even find 2012. After this pullback in here, all right, you can pick 2011, 2012. And if I look at this move since here to about the same position, give or take a few points, we're up 98% in 3 years. So we've had about a 30% year return ever since 2008 when the market died. And all we heard was, had you been invested for the last 10 years, you would have not made any money. Well, if you've been invested the last 6 years, you made about 30% return annually in the market, which isn't too bad. So we're in an uptrend, and let me clear this crap off, the crap being the trend lines. And, maybe we're slowing that uptrend down. We're still in an uptrend. If you look at this uptrend and you look at, let's just go to a long-term weekly chart. Here's 99, 2000 top. Here's a top at the same level in 2007, 2008. And here we are today. And you kind of look at this run that we had going into 2000 and the run we've had today. It kind of looks kind of similar, actually. So I'm just curious. And I haven't pre-done this, so you never know what you're going to see. So from here to there, we had about 500 days and about 400%. And from here to here, we've had about 300 days and 220%. So we're only half the run-up that we saw in the 90s to its peak in both time and return. But from a pattern perspective, it kind of looks a lot like, I can shorten it down to here, and now I got 268 days. So frankly, maybe that's the important line to look at. That from this beginning of this move here, and from this move here, we're very similar in days and in return. So perhaps we are going to get to a point soon where we expect, just based upon historical perspective, to see this market turn around. Again, on a monthly chart, you can see we broke through old highs in the mid-1500s and had another 40% run since then. Let's go back to the dailies. So let's look at more recent times and get an idea what's going on. Now, when I look here, it looks a lot more like a sideways looking chart that hasn't done much. And I think, ever since the end of last year, and certainly since the end of February, when we ran up here, we've been in a trading range. Now, you could set the highs of this trading range. I'll cheat and I'll use all right, that would be the high of the range that we're in. And, we can play games, but for the argument's sake, let's just say that's about the bottom of that trading range that we're in. And that we've been going back and forth. Now, I could have put it down here and said this is the trading range. But I think what's happened is that the trading range, we've broken out at various times and expanded the highs and the lows of this trading range. But we still are in a trading range. We're below the recent highs sent in May. And here was the reversal day on Friday after we had a nice run up from the lows on Monday to the highs on Friday. We had a 2.6% return. And sort of the scary thing right now is if I just go from here up to here, we've only got a 3.2% delta in this trading range. So it isn't a lot to go in a single week from the top to the bottom of the trading range. And, we can play with numbers and maybe the trading range is closer to here. And I think everybody draws it different. But the bottom line is we are pulled, we're sort of in the upper middle. Yes, there's room perhaps to see this go up, and that would be a 1.2% up to get up there. And it's somewhere in the neighborhood of a 1.9% to drop to support. So we're sort of in no man's land on the S&P 500. We could go either way. I mean, my guess is that at some point this 200-day moving average and my support lines are going to come together, and that might be adding support and helping us go higher. These little red things here are those Hindenburgs that we've seen a couple of recently, but I'm looking for periods of time when we just see a ton of them. And there's been changes in how it's been calculated. But normally, I get nervous when I see series of these. So this has got my interest. So long-term uptrend, by movement, should be getting toppy soon, going sideways in the midst between support and resistance. That's how I interpret the S&P 500. Let's look at the NASDAQ. NASDAQ has pretty much traded to new highs. And in fact, I think that the NASDAQ took out the intraday highs in the past as well, and it closed right above the prior high. NASDAQ is still the bullish one. That said, if we are in some type of a trading range here, we're closer to the top, not to the bottom. So the NASDAQ might get good news this week and lead this market higher, which would be great. Or if it holds true to form, every time it's popped its head and looked like it's broken out, it's pulled back. So I have unlimited upside, which is less likely, and down to support is not a big difference. You're talking less than 1% to get down to short-term support. And I suspect longer-term support is probably in this range down here, and that distance is 4%. So if I have to think about my high, low, and my intermediate scenario for the NASDAQ in the short term, my high road is we get some good news this weekend, the market opens up, and the NASDAQ's into clear blue sky with no obvious resistance. Anybody that's bought into the NASDAQ ever is a winner. I'm joking, of course, but there's nobody that's bought. Once we take out this high on Friday, there's nobody that's a loser of recent who's bought the NASDAQ. And we have clear blue sky. That's the high road. My intermediate road is we pull back to this short-term support, which is about 1%. And then this is the bigger pullback. And then ultimately the big pullback would be to somewhere catch up to that 200-day moving average that's down here. So I have to be prepared for all those scenarios, and that would still be a relatively modest pullback. If I'm very bearish, which I'm not, this is probably where the longer term support is at 4,500. So let me clean this up and tell you what I think is going to happen. I will be surprised if the NASDAQ just keeps going higher from here. I think we pull back off the new high on Friday, that we have some support can be drawn down here, and that, like everything else, we're probably going to bounce between support and resistance. That said, we are right under all-time highs, and it's hard to be super bearish in the setting of an all-time high. You notice the high volume on Friday on a down day, but that was quadruple or triple witching, so maybe not a big surprise. The other, let's take a look at the Russell. I mean, how can one be horribly bearish when one looks at a period of time when we've now broken out to all-time highs on the Russell as well? All right. The Russell is now at all-time highs. And, very slimmer in my mind. I think that we're sort of in a trading range in an uptrend with higher lows and higher highs in the Russell. Now, and we are up near resistance as well. So the Russell could break out to new highs. It could run up, as it did here, the trend line. But the Russell also, to me, is in a position where it might pull back into support this week unless we get positive news. And then lastly, let's look at the Dow Jones Industrial. And a couple of things to point out here. Let me clean up my junk. I love trend lines, can you tell? Here's where the highs are. I think the ultimate support is somewhere in this range where you notice the 200-day moving average is. And we are stuck in the middle of a sideways trend line where we're in the middle, and we sold off on massive volume on Friday, but again, triple witching options expiration. So despite the bullish comments from the elder indicators, which show we've been in uptrends, we clearly have been in short-term uptrends in all of these. We're near resistance at best. We're in the middle of the trading range. And I think this market could go either way, the Dow. Now, challenges that the Dow has, transports. Now, I might think that we're here and could say we've got a triple bottom in the transports, and maybe the transports are done going down. I thought they might have been done going down here, and they weren't done going down. If I go into a bigger picture, transports have sold off hard from their peaks here. In fact, if I go to late 2014 down to our most recent low, they'd sold off over 10%, have been in true correction territory. Will airlines lead them higher? Trouble is the rails are still weak and trucks haven't woken up yet either. So transports are hurting the Dow, and with the interest rates coming down, that might give a stimulus for the utilities. You can see they're up this week, or they pull back a little bit on Friday. So I guess to sum this up, I'm intermediate on my chart reviews. I'd like to see news push us higher. So I got to be prepared for the long side and the short side. But until other things change, we're range bound, which is why I said range bound still. I look at the dollar. The dollar, as you know from listening to me over the last months, staged a massive recovery, taking out the 2010 and getting close to 2009 highs, and is sold off. And the question is the dollar done with this rise, and is it going down? Well, if you look at trend lines, to do my favorite thing, may not be good at drawing them, but I like to use them. You've got the dollar lower highs, lower lows, lower highs, haven't declared the lower low here in a downtrend. It's probably coming up to support with that 200-day moving average. If the dollar maintains weakness, it's good for U.S. stocks being traded ex-U.S. It's also good for gold, which staged a nice bounce this week, getting close to the 200-day. And I sound like a broken record. My problem has been I got to see it get above this 200-day moving average and stay before I'm going to get bullish on gold. But clearly, we're getting closer this week. Next week, we might be talking about another failed attempt. Silver, which adds some industrial use, not quite as nice a week. And then I mentioned that I was concerned about the XLE and oil. You can see oil at best here is flatline, and it looks like its uptrend may have stalled. Maybe oil will bounce, but there's been a lot of bearish noise. And here is the XLE, clearly in a downtrend. Here's the services gapping down this week. And here's the oil producers, also in a downtrend. So I've seen a lot of statistics that talked about the fall in the typical energy stock versus oil, and suggesting that there's more fall to come on the energy stock to catch up to oil. I'm just showing you what I see, and I play the market I get, and this just gives me a playbook to work for until the bell opens on Monday morning. Now, I'm sort of neutral on the market, although based upon my elder indicators and my other work, it's okay to be buying. And with the small stocks leading, I'm still feeling good about growth. Now I want to jump down into industry groups and get an idea of where I want to be doing my buying. So I've got 175 groups. Let's look at the ones that are moving up. And I only have 43 that had momentum or force to the upside. Specialty, pharma, biotech, airlines. That's where I'm playing. That's where my money's been. Home builders, hospital care, supply chain, know those well. And then, mortgage finance have been hanging around the top for a while. REITs showed up this week. A lot of healthcare services made it to the upside. Tobacco pays a dividend. People might like that. Utilities sold off on Friday, but they were showing up earlier in the week as well. Generic pharma, another place I like. So let's look at the top 10 and see if I can find anything good to look at. Quite a few buyouts and news stories here. So specialty pharma, and I'm going to go into my dirty view and let me talk about this view for you here. So here's my trading view that I like to use. Ignore the things you can't see because I have a lot of things I'm testing out that I hide. You can see there's two bars here. Up at the top, these are the bongos. These are a long-term momentum timing model. The top one is a weekly, and the second is daily. In an uptrend, the weekly stays green a long time. In the short term, during times of pullbacks, which I like to look for, go red. The third green line is green, yellow, red, depending on accumulation distribution. The darker green, the more accumulating, the darker red, the more distributing, and the yellow is neutral. Then I have two more ribbons, 13-day force and 2-day force, and like the bongo during an uptrend, the longer force is green, where the shorter force pulls back and turns red. This dark gray, the next one down here are Bible gap ups, as defined by Morales and Katcher. Then I have the squeeze with the yellow, and then the red and the green are mobile breakouts and breakdowns. This dark gray line is my industry group rotation. The candlesticks obviously are the price. These little red dots and the green dots are Wilder's PSAR, which is a trading system, an indicator that I use looking for momentum breakouts of support and resistance. The pink line or magenta line is an 8-day exponential. The green is 17-day simple. Blue is 50-day simple. Red is 200-day simple. Moving averages. These blue dots and the corresponding number here are the earnings dates in the past and how much came out. If there's green dots, those are the dividend dates. And if earnings are close, and it's not close here, it's not to August, they actually paint to the right side if they're coming up in the next few days. Down here is my on-balance volume, and overlaid would be Eurekas and Phoenixes. Eurekas would be follow-through days in the market, they're green. Phoenixes would be the opposite, follow-through days to the downside, they're in red. They're calculated only on the NYSE. We haven't had one in a while. And then these here are the kahunas with the regular volume underneath, which you can't hardly see. And kahunas to the upside are blue, kahunas to the downside are red. These are momentum indicators. I'm looking for stocks right here. I'm looking for stocks that have been in an uptrend or sideways basing that break above the 50-day moving average with a kahuna, rising OBV, rising group index, mobile breakout from a squeeze and turning green. That's my favorite setup that I like to trade. Obviously, this stock has already run. It's made its move. Now, I might be curious why it's doubled in just a few days. So I might go to more info from Web and look at FinViz as an example, and then see if there's some M&A activity or if this is just, what did I do? I'll do this later. I don't want to do this now. Go back here. One more time. And we could see it grew on data. All right, I like to see that in a lot of these. Remember that Euron that I mentioned earlier? It's data that grows them. And if you have chronic constipation, or if you're taking narcotics, constipation is pretty bad. And that's something that has a lot of sales opportunity. And if I scroll down my HGSI stock, I can see it's got a market cap less than $1 billion. So this becomes an interesting story because if I got a drug that's got positive data for a common problem, somebody's going to take me out and I'm an acquisition candidate, or I'm going to build a company and make money selling my drug. High jump bars up at the top here. It had a red candle high. It's pretty extended, has a spinning top here. If I was interested in buying the stock, I would be waiting for it to pull back some. And you notice it's got no revenue, no earnings. So it's popped on a story. If I can get it back down here, I'd be happy. I probably wouldn't be chasing it at this level. Alkermes, interesting chart pattern. Big uptrend, pull back to the 200. Looks like it wants to run again, turning green up here, coming out of a squeeze. Big volume coming into the chart. It doesn't make money, which I don't like. And again, I'd probably right-click, more info from web, and go down to my favorite, which is FinViz. You all have your own favorites, and see late-stage data. So this is a relatively small cap biotech. What's its market cap? It's 10 billion. It's not that small. It does have revenue. Doesn't make money currently. Interesting chart pattern though. A couple of kahunas propelling it higher. Good groups strength. Radius Health, another smaller cap biotech, doesn't make revenue. Popped on news, I suspect. I know they've got a couple of drugs that are close. One will compete against one of Amgen's drugs, and I've met them in a different context. Top line data, 25-month results. So again, these small stocks are propelled not on earnings, but on stories and getting good data. Here's Fibrogen, deep pullback. Kahuna, big move on Friday. Like to see it move a little bit more. AERI again. So you get the point here. None of these have revenue. They've all got chart patterns that are moving up. Who do I like that I'd actually buy? Here's my favorite. And yes, I have a giant position in this using some leaps where I went long and short leaps at the same strike price. And I think either I have to go back and look. I think I did it back in here in the $16, $17 range. And I've made money on both the long, the short leaps are almost worthless now. And again, it's another one of my favorite strategies that I'll talk about at the meeting. Now, it looks expensive here. It's not. And one of the things that I like MarketSmith for, and let's see if it's going to work. MarketSmith, if you're a Chrome person with the latest version, you have to go in and change some settings to get MarketSmith to work on Chrome, but I think this version's older. It's not going to work on this, so I'm going to have to go into Explorer. Yeah, whatever the way that Silverlight interacts with Chrome, they're trying to not support it, probably some kind of a fight with Microsoft. There's a way around it, but I'd rather just go and do it in here where I don't have to worry about changing my settings on the fly. All right. I guess I can't type on the fly either. This is all the stuff that we'll be doing at our live meeting coming up. So here's why I like Horizon Pharmaceuticals. I'm an earnings whore. Are you going to fight me or are you going to work? All right. And I love to look at stocks that have growing earnings per share growth rates that are growing faster than the multiple. Here we have a multiple of 36, and look at the growth coming in 2015, 2016. Let's say that next year we make the $1.77. And let's say the multiple comes down to 30. I don't know why it would come down on a rising growth rate. Let's just say it comes down because the market changes. 30 times $1.77 is $50. This has 50% growth opportunity from right here if it just meets its numbers and contracts its multiple, which will be less than the growth rate. This is why I like Horizon. It's one of my favorite holdings. You could see it's actually triggered a pivot point buy. It's up 5% from that pivot in the last 18 days in MarketSmith. And it's one that they track as well. I like this company a lot, but as I said in the beginning, I have to be honest and tell you that I have a holding there as well. So uptrend, sideways, Kahuna's coming in, turning green, mobile breakout from a squeeze, and good earnings growth, which for whatever reason is not picked up in HGSI. I like Horizon Pharma. Here's one I'm short. And I'm short ESPR because I thought price got way ahead of itself. It's only at 1.8 billion, so it just means they don't have enough shares. And I shorted it on the breakdown of the 50-day moving average. Probably a good position to cover now because it's sort of undercut its prior lows, which I've now read about in the book, and then reshort it when it fails up here at the 50 again. That's Esperion, maybe a great company, just the stock looked like it got ahead of itself. And then here's a couple more. Posen, big move, it's ahead of itself. It does have some revenue. It does intermittently have earnings. So here's how I use MarketSmith. I don't get the numbers. I come back here, type in POZN, and I see it's going to make 77 cents times 20. So $15, $16 valuation at the 1-to-1, and it's trading at 11.5. It's still got room to go. I know a lot of people like Posen. It's run a little bit too much for my taste. Acadia is the next one. This one is an IBD. Going sideways, had a Kahuna come in on Thursday, didn't do much on Friday, turning green. I like that pattern, which should have more earnings. And here's where you got to be careful. Here's Eagle Pharmaceuticals. Love this stock, love the company, love the chart. Now, when would I have liked to have bought it? I would have liked to have bought it down here. Kahuna and volume coming in, breaking out above the moving averages. I would have liked to have bought it here. Kahuna breaking out above the moving averages. Unfortunately, I didn't buy it until here. Here's when I figured out the story. So I got a nice profit and I'm happy with it. Here's where you got to know the company. Not that excited here. You notice this number? This report was last month. Actually, this is, it was for this quarter, but it was released, I thought, in May. Still looks ugly. You need a good source for earnings. HGSI is a great start, but I need to know out a couple of years. EGRX. Here's why I love Eagle Pharmaceuticals. It's projected to make $5.65 with a 600% earnings per share growth rate. Give it a multiple of 30. It's a $150 stock. The stock doubles in the next 18 months, in my opinion, from here. I know it because it's in my world. I'm not under any NDAs to not talk about them. I like Eagle, and I think the stock is cheap. Its market cap of $1.3 billion is cheap, whether this is a takeout candidate or they're going to spend money and build a sales force. You got to love those numbers. And then the other one that I've been spying and nibbling on is ANIP, A-N-I-P. My concern about ANIP, and I love the earnings in MarketSmith. And George has done a great job helping and making ours better. Trades at a multiple, which is about its forward growth rate on a 380 times 40. It's $140 in 2016. So I see room to go up. This was a great pickup right down here. Kahuna off of a squeeze here in a mobile breakout, starting to turn green. I think it's still a big buy with breaking above the 50 and growth rate. So you want to know where there's a bull market in this craziness? It's in specialty pharmaceuticals. Go back, biotech. Same old story. A lot of these are old names that are making moves. I'll highlight some of them. Biogen IDEC, deep pullback, granddaddy of biotech, multiple Kahunas breaking above the 50. Coming out of a squeeze. Looks great to me. It's an expensive stock. Kyotherma Biotherapeutics is a takeout by activists, now known again as Allergan. BioMarin gapped up. Great story. News-driven. Makes some revenue. Doesn't make any money. Not my favorite, although it's, well, I can't say. It's a great picture. I like Celgene a lot. Celgene underwent about a 10%, 9% pullback, and has a pattern that's the same pattern that Gilead went in through months, bouncing around the 200 and the 50-day moving average, getting into a squeeze and taking off with momentum. My target is to get back up to the 130 range on Celgene. Amgen, same story, came down, a lot of touches on the 200, about to break above the 50. Looks like a nice place to be. Doesn't have as much growth. Alexion, expensive drug, limited marketplace, broke out above its 200. Not my favorite in the space, although a lot of people do like it. And Intrexon is a young stock that makes some new cancer therapies, sort of giving me a cup here. I've got this on my watch list and probably want to get back into Intrexon. And I wanted to put up Gilead. Just type it in and show you that pattern of why I'm kind of excited by Celgene. Go look at Celgene. And let me clear these puppies off, the trend lines. Tell me that Celgene doesn't look like this big run up and bouncing across as the 50 and the 200 come together. And then, boom, you get some kahunas and you bounce. And you go on to a nice sustained run. I think Celgene's about to do the same thing. That's biotech. Must take all my bullish enthusiasm with recognizing that this market's still at risk. Airlines have been in the doghouse. I think they're ready to move to the penthouse. Here's the pattern you're going to see throughout. I think you've got your lows are put in. And why is this important? Because I can put my stops right around here. I don't have to have stops that are $10 away from these prices. Because these are cheap prices, even a stop here at 39 away from 42 is about 8%. So I think that's a fair stop position. But let's just take a quick look. Why do I like the airlines? Well, I hate to do this again, but let's just go in here. American Airlines trades at a multiple of 6. It's got a growth rate of 2015 of 59%, slowing into 2016. UAL, growth rate of 100%, multiple of 7. Delta, growth rate of 30s, multiple of 12. Hawaiian, growth rate of 100 for 2015, multiple of 15. Alaska, growth rates 40%, multiple of 14. There's a reason they trade at low multiples. But let's say you don't change the multiple comes down to 10. Multiple stays the same at 14. And I get $6 in 2015. That's an $80. 20%, 30% moves from here, and all these I think are doable. And if you're a fan of Barron's, and I'm looking for 30% moves. And Barron's is looking for a 50% move. Here's the cover from the story from this week. So I think airlines are interesting. They're the third ranked group. Here's American Airlines. Done going down? Maybe. It's at the same place it broke out from back in 2014. Delta. Done going down? Maybe. United. Done going down? Southwest, not as promising, but maybe, good earnings per share growth as well. Alaska has already broken back up from support up to the 50. JetBlue never really broke down much, back at the 50. Pick one. I think you need to own an airline stock right now. Publishing, broadcasting, I don't know this group very well, so we'll look at the first couple, see if there's any comments. No idea it had a big price move. So this is up based upon the fact it was up $1.50, which was 42% on big volume on Friday after getting killed. No thank you. Martha Stewart, I think, is under acquisition discussions. News Corp A, deep pullback. Kahuna, still in a downtrend, hasn't taken out prior highs. So this group is moving on stories related to takeouts and a big bounce. Packaged food. Don't know much about them. ConAgra had a huge move on Friday. So what would I do? I go more info from Web, FinViz, and I would see on ConAgra Yeah. Jana Partners, an activist, takes a stake, so they think it's going to be doing something from a corporate perspective, and the price popped. That's probably not a reason to be chasing. Pinnacle Foods, same pattern. I'm taking forever today, but it's Father's Day. I'm a father, and it's in the morning, so you can turn it off whenever you want. Announced a dividend. Secondary, I don't know why that would move the stock. Quarterly dividend. It's up because of the stake. I don't know the relationship of those two companies. Post Holdings, Treehouse Foods. If you want to look for a low risk buy point on a stock that makes money, you got your stop range down here. Had a couple kahunas and pocket pivots come in. Problem is you got resistance at the 50 and the 200. Not my favorite group. Let's move on. Home builders. Might be some interest stuff to do there. KB Homes was up nearly 10%. A home builder up nearly 10%. This is a game changer, at least for owners of the stock before it went up. We are in a downtrend going back this entire chart to 2014. And we gapped up on volume with a kahuna, group strength, and all green on Friday above its descending trend line. Something's going on in home builders. KB Homes looks great. Maybe people are buying homes because they're afraid interest rates are going up. Maybe one of the things John Persons talked about, there's all these people that are renting that want to move back into houses. Maybe because we're now 7 years from a lot of the bankruptcies, which means people can get mortgages again. KB Homes, big move. Lennar, I'm a holder of this one, broke above its 50. Rising OBV with the kahuna. I probably like this chart better. Pulte, still in a downtrend. Tepid earnings per share growth, small dividend, big move on Friday. DR Horton, maybe the best of the bunch if you look at the combination of earnings per share growth, breaking out above descending trend lines and above the major moving average with good earnings support greater than its multiple. Toll Brothers looks just like the last one with not as much earnings per share growth. These things move en masse, and right now they're in fuego, they're moving. Probably as you need an airline, you might want to be adding a home builder. Entertainment content. So take a look very quickly and see if any of these look interesting. Here's Viacom in a downtrend, not that exciting. Discovery Communications in a downtrend, not that exciting. Stars, this is exciting in a big uptrend, makes money, no dividend, kind of extended. I'm looking for pullbacks and breakouts. I don't really see that here. Discovery kind of breaking above the 200, but it's been in a pretty bad downtrend. Don't really like anything I see here, but money's moving there. Healthcare supply chain. A lot of this is going to be news-driven and dependent upon whether the Supreme Court strikes down Obamacare, because almost all these companies make small margins on big volume, and Obamacare increased their customer base, which increased their volume base. And as long as Obamacare sticks around, some of these will continue to do well. Diplomat's a recent specialty pharmacy based in Flint, Michigan, that's doubled or more since it became public. They're in acquisition mode. Express Scripts, big money manager, pharmaceutical benefits manager. They manage the spend on drugs, became relatively famous in how they've been handling the hepatitis C world. It's kind of at a decent buy point, kind of coming off the 50 and the 8 would have been a better buy point back here or a couple days ago with the kahuna. I think these are a winner because they're a cost containment company. Catamaran is under acquisition, the same group. Then I have McKesson and Cardinal. These are lower left, upper right, intermediate tightness. These are the guys that are basically the toll road of any drug or medical supply that goes into a hospital, physician practice clinic, ambulatory care center, usually comes through one of the big three, McKesson, Cardinal, or ABC. They have margins in the 1 or 2% range, but what they are is just incredible operating machines. And as you increase the volume of healthcare, you grow these companies' bottom lines. And it looks to me like it's giving us a nice time to be nibbling. I did go into it this week. Kahuna on Thursday. This is McKesson. And I also have a position here in Cardinal Health. Again, lower left, upper right. It's been going sideways for a while. And I've got some leaps on Cardinal. Mortgage finance, with interest rates going down, that might stimulate housing and stimulate people taking mortgages. So that might be good for something like Tree. Don't love their forward-looking earnings per share growth. Stock broke out. This is a relatively recent IPO. Out of curiosity, let's go into MarketSmith, TREE. And now I like it. $2 in 2016, 45%. So it's got maybe 20, 30% growth opportunities for here. Growth coming in next year greater than its multiple. Not a bad looking chart. And you can see its IPO. It's been several years. Okay, it's been longer than I thought. So Lending Tree might be an interesting play. I like MGIC's chart. Been watching it for some time. Nice lower left, upper right. All green here. Great earnings per share growth, much more than its multiple, but does not pay a dividend. New York Mortgage Trust kind of going sideways, but pays a 13% dividend. I'll take a sideways going. If I'm fixed income, can't make money in the banks, and here's a stock that's basically going back over a year, has been flat and paying a 13.4% dividend. Stocks like this do very well in a rate falling market. And then lastly, generic drugs, staying in the healthcare theme. I like Impax's chart. I like Lanet's chart. Lanet pulled back deep, just broke above the 50. This has been one of my favorite stocks. I'm out of it now, but I've been in it and out of it. It's one of my example stocks during my education programs. Great earnings per share growth for 2015, but slowing in 2016. Here's Impax. So I like this pattern going forward as well. But I think that any of these work. Lanet certainly works right now. Don't know anything about Sagen or Amphastar. Here's Impax basing on the 50. This is pulled back to the 50, waiting for a signal, the group that did so well this past week. I'm going to wait for a kahuna to come in or a reason to buy it. I like the earnings per share growth. So that's how I take a look at the long side. For the short side, I look at the things that are moving down. In essence of time, probably not going to spend much time there, but banks, lots of banks, internet, here's the midstream. Up for the, only down a tad during the week, down more on Friday. Semiconductor devices, gosh, Ambarella, what a play this has been. How many of you were fortunate enough to play Ambarella? This is another one of my favorites. Why? Breakout above the 50 with a kahuna, mobile breakout from a squeeze. If I missed that, I would have picked it here. Big move up, mobile breakout, coming off of a squeeze. Kahunas off the 50. Big move off the 50 with kahunas. And you could have been in and out of the stock and made a boatload of money just by buying the pullbacks and taking them during the time of a big kahuna. And look at the earnings per share growth telling you it's time to buy. So I do the same exercise, but I'm getting tired, so I'm not going to do it today, to the downside. Now, there's my lovely wife, and let me show you how I use John's stuff. So one of the advantages of TradeStation is in TradeStation, I can run scans and I can run radar. So I form a big radar screen during the week. And in that radar screen, I include all kinds of goodies. I include price performance. You can see the bear 3Xs did much better than the bull 3Xs. And you can see every sector ETF on Friday was down. I have my favorite indicators, so I could look at, let me pull up my Tigers, which is my master scanning list. I look for mobile breakdowns in a squeeze. These are stocks that had mobile breakdowns in the squeeze. If I'm looking for potential shorts, I might be looking in here. I could look intraday real-time mobile breakouts from a squeeze. You notice I can look intraday for pocket pivots occurring. Up and pocket pivots down. Not sure that they're valid if they're down. Apple with a pocket pivot down on Friday. That can't be good. I can look at real time for stocks getting Bible gap ups. And 5 minutes, 10 minutes after the market opens, I know who's gapped up and met the criteria for a Bible gap up. I then know what percentage of the Bible gap up volume requirement you've made in a real-time basis. I don't have to wait till the market is over to know which stocks have been Bible gap ups. And then I trigger. When I see the SMA being red, I know that the price is below the 50 and I'm not going to chase it. I'm going to skip the ARPS indicators in the essence of time, but then I have John's scans coming out during the day showing me new bullish reversal signals. Okay. And trend status. And then longer term prior daily and weekly signals. And I know my earnings indicators. So I can put up to 1,000 instruments in this radar screen, and I could be scanning during the day looking for buy and sell signals. So that's the radar. The scanner tool allows me to scan and looking for signals occurring at end of day. So I scan, for example, the MarketSmith 250. And this is one of John's signature signals. It's called the high close doji. And I look for, UCBI. It's a bank stock. And I look for stocks, and you can see in orange. Let me see if there's one here that I like specifically. They're all good. All right, let's go look at FCB on a different screen. So I'm going to look at FCB. So the high close doji basically means, it's not a real one, I have to find stocks in a downtrend. So let me take that list. I need to find stocks that have been in a downtrend that have a doji, and then within 3 bars close above that doji. And that defines a high close doji. MTSI, not in a downtrend. Hard to find downtrends in this market. Well, when you're looking at the MarketSmith 250, maybe you're not going to find a downtrend. So let me take a bigger list. Let's look at the Russell, which we said is the strongest. And let's see if I can find one of these in a downtrend that has triggered a high close doji. So I know they've all triggered high close dojis. ADXS, okay. I'm going in blind here. So CVT might be one. Hovanian. Hovanian might be 2. I know. Every one of these has the signal, but it's only of value in the setting of a stock in a downtrend. So here is Hovanian. We know that home builders are bullish. So let me see if this one's going to look good. So Hovanian had a doji here. You can't see it very well. Let me change this to a pointer. So Hovanian had and then had a bar here. I don't like this one. It's not demonstrating it well enough. So it was one of the other ones I wanted to use. Proof that I'm not here. All right, well, let's use Meg, my old boss's name. So let's expand it again, pull it over here. Okay, perfect. So Meg has been in a downtrend. In that downtrend, it gives me a doji. Within 3 days, if it closes above the high of that doji bar, it's called a high close doji. And I know from John's stuff that a high close doji is probably the best signal I've learned from him for taking long positions. There are preset rules that I take as far as my stop and my return, where I take profits. And I'm able to scan the market to find stocks that meet that criteria. So kind of interesting, because this is a non-screen stock. Let me go back into this pattern. So not only, so we're in a downtrend here. It's pretty clear in the longer chart. I've got my high close doji. My on-balance volume is heading up. I like to see that. I've got a person buy signal that came in on Tuesday here, a buy signal 2 weeks ago, and all my signals fired down here. So Meg might be one that I might consider for an acquisition or for purchase, not acquisition. I'm only buying stock, not companies these days. And so I'm able to scan various markets looking for stocks that meet those criteria. So I can look for high closed dojis and low closed dojis. I can look for person buy signals. So a person buy signal 2, for example, and let's look at rack space. A person buy signal 2 is one of my favorite buy signals because it means a buy signal is coming in at monthly support. So if I'm at monthly support, I'm looking for stock in a downtrend, and I'm within so much of monthly support. And let's take a quick look at this. Let's make this bigger. And here's a stock in a downtrend at support with a person's buy signal. So I'm able to scan the market looking for stocks that are giving momentum buy and sell signals, which is the PPS signal. I'm also able to scan the market looking for high and low close dojis. And when I go back to my radar, I'm able to put 1,000 instruments in real time during the day, be looking for stocks that are flashing. Oops, I hit the wrong thing. My bad. Stocks that are flashing real time during the day. So let's see. Who is this? AAL, imagine that. Give me a bullish signal intraday. So I could go and open up a chart. I like this just because I have 3 different time frames. So let's look at AAL. So we have a couple of different stories here. Clearly, long-term uptrend, now in a downtrend. Okay. It's still in a, I'm looking for this little signal underneath in green, like here, it's still a sell signal on the weekly person indicator. and OBV is going against me. So it's a stock that's been beat up. Now I'm going to go into the daily chart. And what do I see? I see the stock had a person's buy signal come in. The histogram is momentum is to the upside. OBV is moving to the upside. And I'm starting to fire my indicators. This one is a MOBO breakout. This is a PSAR reversal, and that's a Kahuna force that came into the stock, and it moved above a moving average. So I'm able to scan and find stocks during the day using radar screen on up to 1,000 instruments, which is pretty impressive. And at the same time, I'm able to do scanner end of day. Now, another alternative is to use Thinkorswim, and I could go into the scanner on Thinkorswim, and I could go into, and I'm going to do this, I have a institution buy and sell indicator, which is this thing here, and I'm going to combine that with price and volume of 250 and 200,000 shares, and I can scan anytime during the day because it treats the current bar as the end of day, and look for stocks with institutional buying or selling with a PPS buy signal. Let's just look for those that have buying. I don't need buying and selling. And I like stocks with options. So I hit scan, and I come up with 1, 2, 3, 4, 5, 6 stocks that have institutional buying, which is this thing right here, and had a PPS buy signal. 3 of them I went long this week. Let's take a look at them. AAL. I use a much higher resolution monitor so I don't get all this junk. You see on AAL, this big blue indicator here, and this is daily, weekly, and monthly, showing me a person buy signal came in. My VSA from Ron shows strength on high volume up bar closing on a high. I have a MOBO breakout. Both forces are positive, and a Bongo daily. I've got a Kahuna. So I have all my buy signals occurring on a stock at the $40 range when the stock's low here is $38.45. It closed at $41.56. So I would have had about $3 risk, less than 8%, and I went long on American Airlines. KBR was one of those. KBR is a lot different stock in that it's actually went through a long uptrend signaled by this buy signal at 14, a sell up here at 20, and came back in with the buy and took out recent highs here. Bullish on effort to rise. I got a MOBO, I got 2 forces that are green, and a Bongo and a Kahuna, and I have a person buy signal. And then Twitter, sort of a bottom fishing buy where I saw a person buy signal coming in on an up day, strength returning and downtrend. I have a pocket pivot both 5 and 10 days. Big volume buzz over 100%. MOBO, Kahuna, forces, Bongo, and I decided to go and nibble. Why? Because if you look at since the IPO, the low on Twitter has been around 30, and it's revisited this same 35 level several times in the past. In its deep pullbacks, I think Twitter's worth a lot more in an acquisition than it is on a day-to-day. So what I basically showed you was I had actually done this scan and looked at these, and these were some stocks that I decided to take at the end of the week. Now I could look for down movers and a PPS sell signal. License studies, PPS sell. Everybody has this one. You don't have this one. Hit scan, and I could see what things are not working. I could see that of the 16 stocks that have institutional volume leaving and PPS sell signals, this is done in Thinkorswim where the PPS indicator is free, I've got 4 oil and gases right off the bat meeting those criteria. That's a lot. The one biotech, Techmira, had some very bad news come in, And then I see I've got some semiconductors weak as well. So I run these all the time. Well, but Jeff, I don't have the NLTs, so let's just clear that one and look at a PPS sell signal across the market, all comers, and you're going to find you have 127 of them, of which a whole lot of them are energy, materials, consumer discretionaries, hotels, restaurants, and leisures. Some healthcare and finance, a lot of finances and a lot of information technology. These might be giving you areas to go searching for potential shorts, or you could look for a PPS buy signal, hit the scan, and you could see where materials, industrials, a lot of healthcare, some financials, where they were buy signals. Now, the reason why I use that market relativity here, which is my institution buying and selling, is it reduces the number of stocks I have to look at. Anything else that I saw this weekend on this list that looked interesting? Loco, if you like buying bottom fishing, here's a stock that was as high as 29 post IPO, actually 42, recent high at 29, now down at 20, and it had a kahuna, a bongos, short term, went green on the force, pocket pivots, trading down here. Here is a monthly chart. I mean, this is where it stops every month. So maybe you might want to be looking at Loco. Again, not a growth stock per se, but buying a stock based upon a pullback to support with a momentum indicator coming in. So I am using a combination of TradeStation, Thinkorswim, and Genesis to find candidates. So let's go back and summarize. My impression of this market is that we're still range bound. You know, part of me is hopeful that China will get sorted out. And with the Fed behind us, that some good news, especially before earnings start to come in and complicate things, could drive this market to new highs. And although we are in that period of time of sell in May and go away, it would not surprise me to see a summer rally if that occurs going into 4th of July. At which point I would say bets are off, and if the odds are historically that summers are weak, and I know that certain people like John Person have been calling for some cyclical bear markets to occur. I'll have to call my daughter back in a second. So if we don't get a resolution of the Greek issue and we get a Greek exit, long term that might be fine, but I think short term that will pull this market down and we might break through support. If I look at where I want to be playing this week, it's pretty simple. I want to play in biotech, I want to play in specialty pharmacy, I want to play in home builders and selected other stocks showing good chart patterns. There will, as I said, there will be no follow-up session next weekend because I'll be busy. And the other thing I would tell you is I could take a couple of folks at my meeting if you, and I'll give you a small discount. You just got to agree to sit in the way back for the first 3-hour session. Everything is included, including all your meals while you're here and internet access during the meeting, at the meeting. So real quick, I like to end with just showing you some of the stocks that I like this week. So I'm not going to go through all these. This, you can stop it and you can write them down and look at them yourself if you're so inclined. This is my list of buy stocks. Starts at Eagle, which we looked at, and goes down to AMC Entertainment. There's that KBR. These are stocks that I thought were interesting from a chart perspective. You can see a lot of them are green. A lot of them are box stocks. Now let me show you the ones that I'm going to concentrate on. Actually, I own the first bunch, so let me just, Eagle we talked about. I love this stock, love the story, love the earnings. Extended. AMAG, another great earnings coming into a biotech stock. Had a kahuna on Thursday, break above the PSAR dot. You might want to go long here. It's expensive, has a big multiple, but huge earnings per share growth. We looked at Acadia. Centene to me is my favorite of the mid-market payers. There's a lot of M&A going on, Aetna, Cigna, United, Humana. This is the next tier down. They have a big managed Medicare, Medicaid business. I think they'll be acquired too, if you ask my opinion. But who needs acquisition when you have a pattern like this? A kahuna off the 50 at earnings, and it hasn't looked back since 2014 in a nice double. We've talked about that many times on my calls. Here's Horizon and Traxon Anip, the same stocks I talked about. What I also do is I break them into subgroups. Let me just look at the ones that I combine with the person signals. And as I showed you the 11 and 0 group last week, this is the group I'm going to really concentrate on. Horizon Pharma looks kind of a cup and a handle, wants to take off again. Great earnings going forward. Ignore this after a kahuna. Acadia, basing, multiple kahunas in a pocket pivot, mobile breakout from a squeeze. Looks to me like it wants to go higher. Community health services. Again, if Obama gets shut down, these hospitals are in trouble. But that said, we took out this area here that's been pretty good resistance. And if I can stay above that 56.5 number, I look for CYH to go higher. Probably less enthusiastic about this one, but if it can hold that line and go higher, that would be very bullish. Allegiant Travel, not one that I mentioned. It's a lot more pricey, but a lot more earnings power. Pays a small dividend. Had some bad press on Thursday, and the stock took off anyways. Pullback to support. Couple touches to the 200. Broke right through the 50 with a kahuna. Looks like it wants to go higher. Pebblebrook Hotel Trust. This is a REIT. It pays a 2.8% dividend. REITs will do well if interest rates stay low. It had pulled back from 50 down to 40, so about 20-25% pullback. Broke above its moving averages with kahunas this week. Out of a squeeze. Great earnings per share growth, enough to cover the dividend. Tower Semiconductor. Semis are weaker now. The Ambarella luster may be rolling off. And here's one breaking through the 50 with a kahuna on Wednesday. Still in a downtrend. Maybe this is wishful thinking. But it is higher highs. And let's see if it gives a higher low and goes higher. Actinium Pharma. This is a story stock. No earnings, no revenue. That's a negative. That said, I know where my stop is. And I had a big kahuna come in on Friday with a mobile breakout, a green candle low, and start changing my technicals. Something's going on with Actinium. Cheap stock, probably too cheap for me. Probably not optionable. But a big move off of support. There must be a reason why I put it here. I don't remember. Let's take a look here. ATNM. Big person buy signal. Strength on high volume up bar. Closing on a high. Nearly 4 times average volume. Pocket pivots 5 and 10s. Mobile breakouts. Bongos. Kahunas. Forces. Off of support. This is where it stops. Usually when it falls. I now know why I picked it. Service Source International, a stock that got beaten up but is now broken above the 200s in an uptrend with a kahuna coming out of mobile breakout from a squeeze. Gaylord Entertainment, another REIT, nice dividend, great growth, pull back to support, had kahunas off support going higher. I'd like to wait to above the 50. Here's that KBR. Then another same pattern over and over again, uptrend, pull back to support. Kahuna's coming in, pocket pivots, starting to turn green up here, coming out of a squeeze. Great earnings per share growth, 2.7% dividend. Buy it when it takes out the 50. On that note, I'm done. Have a great Father's Day. Hope to see some of you this coming week. Thanks to my wife for letting me take my time on Father's Day to do this. You all have a great week. Happy trade hours.